Welcome back. Today, we're discussing a pressing issue, the United States national debt. It's growing faster than the country's income, and there's no clear repayment plan. This could have serious global repercussions, and more importantly, it is a risk you need to manage personally. The U.S. deficit for this year is projected to exceed 7% of GDP, around $1.9 trillion, nearly double the deficit to GDP ratio of the next highest developed economy. U.S. public debt is at a historic peak of about $35 trillion, with annual interest payments surpassing $1 trillion. The debt is growing at a rate of $1 trillion every 100 days, or about $3.6 trillion per year, the fastest of any developed country. The IMF has warned that the debt-to-GDP ratio could reach 140% by 2032, up from 120.7% today. Could the U.S., the world's largest economy, be heading towards a debt crisis? Why isn't there a plan to address this? If the trend continues, what could be the global impact? The U.S. debt situation is complex. The debt is in U.S. dollars, and there's strong demand for U.S. bonds, making it less risky compared to other countries. Many developed nations have higher debt-to-GDP ratios, but numbers above 100% have become more common since the financial crisis and the pandemic. Interest rates are a crucial factor. Low rates and high growth make debt sustainable, but with falling growth and rising rates, concerns grow. Previously, some believed a strong dollar meant the U.S. didn't need to worry about debt, as long as spending drove growth. However, this view has diminished as interest rates have risen to their highest level since 2001. The current U.S. debt situation seems relatively stable, but the dynamics are worrying. The debt-to-GDP ratio is rising rapidly, especially with slower growth. Fiscal deficits have been a chronic issue since the mid-1970s, except for a brief surplus under President Bill Clinton. Deficits have worsened since the financial crisis, Trump's tax cuts, and the pandemic. Global investors may view U.S. debt as an unsolvable problem. Despite economic growth, deficits continue to rise. Normally, a growing economy should reduce deficits, but the U.S. has seen increasing debt even during periods of growth. How did this happen? Fiscal conservatives have largely disappeared from U.S. politics. The Reagan Revolution and Tea Party radicals opposed tax increases, focusing only on spending cuts. U.S. taxes as a percentage of GDP are among the lowest and continue to fall. With rising spending and stagnant taxes, deficits grow exponentially. President Joe Biden proposed higher taxes on top incomes but also new spending. Donald Trump advocates for further tax cuts. This is a spiral. If the current trends continue and Congress does nothing, what could this mean for the world? A U.S. debt default is extremely unlikely due to constitutional protections. However, even without a default, global markets might panic. If U.S. debt payments continue to rise without a plan to curb them, investors might view the debt as a major issue. This could lead to higher interest rates on U.S. bonds, a spike in U.S. rates, and market instability. This would create a vicious cycle of higher rates, increased risk, and reduced growth, worsening the debt situation. A weaker dollar could follow, leading to significantly higher U.S. inflation and a global increase in interest rates, further harming U.S. and global growth. The long-term impact will be a loss of trust in the U.S. economy as a safe haven. For decades, U.S. Treasuries have been considered the safest investment, and the dollar is the world's reserve currency. Losing this trust could make borrowing more expensive for the U.S. and massively diminish its economic privileges. The impact wouldn't stop at the U.S. The dollar's role simplifies international transactions. If its dominance wanes, transaction costs would rise, complicating global trade and investment. This could lead to fragmented markets and reduced globalization. There are no easy replacements for the US dollar or treasury bonds. Alternatives like euros, yuan, or cryptocurrencies might emerge, but they come with their own challenges. Central banks have been accumulating gold, which in 2024 surpassed the euro as a major reserve asset. this scenario isn't set in stone. A new Congress might tackle the debt issue after the November elections, though this seems very unlikely. In the meantime, consider that there is a debt spiral. You know how the final chapter of the story ends. So start protecting yourself by investing in assets like gold, silver, and other hard assets before the dollar's purchasing power crashes. Remember to like and subscribe for more updates. If you have topics you'd like us to cover, drop them in the comments. Thanks for watching.